Well, there's a negative connotation around reverse mortgages, but is it a good financial tool that maybe works for you? We're going to break down exactly what reverse mortgages are today, try to clear up some of the misconceptions, some of the confusion surrounding them, and let you know how they apply and whether they might make sense for you. Welcome in. This is the Smart Mortgage Show. Ben George with Bill Litton of Cross Country Mortgage. And Bill, hear the word reverse mortgages. I don't know that I've ever heard anybody talk positively about them. And I think of them as like an old product, right? For people that are in retirement. So I'm sure there's some things to clear up today, right?
A lot of misconceptions surrounding reverse mortgages. And, Ben, to your point, most people, when they ask me about a reverse mortgage, they do so very cautiously or even with some level of, concern, or this is dangerous, or I don't like those reverse mortgages. Now, maybe they heard a story, or they have a misconception, or somebody misused the product on the wrong person. But, by and large, it's a really good option for the right situation.
Yeah, and that's kind of the whole point of the conversation today. And this is what we do a lot of times on the show is talk about different mortgage lending options and products that are out there that maybe you aren't aware of or maybe don't have a really good understanding of. The show tries to help paint the picture, understand it in practice, how it actually works at Cross Country Mortgage and how Bill, as a mortgage lender, helps guide people through that process and helps identify if it's a good product for you. So today, again, obviously focus on reverse mortgages. So let's just begin kind of explaining in simple terms what it means, Bill, because I think everybody kind of has their own idea or opinion or definition of what they think it is.
Yeah, and really, let's start to clear the air just a little bit. So a reverse mortgage, it means most mortgages that we're familiar with, technically they're forward mortgages. Every time you make a payment, the balance goes down on the loan. A reverse mortgage, it kind of just goes in reverse. So you don't make payments. And since you're not making payments, all of the interest that accrues increases the balance month over month. So it works in reverse. And really what that does is it frees up the homeowner, opens up cash flow in their budget because they don't have to make mortgage payments. Now, these loans are FHA loans, so they're federally insured. Okay. And really interesting to understand as well is that the reverse mortgage, it basically, there is no recourse, meaning you're not making payments. That's understood. The only time that the reverse mortgage company wants to get out of the scenario is, unfortunately, when the homeowner passes away, because it's all based on that homeowner's age. They kind of use an actuarial table to understand how much they can lend to them and at what interest rate. And if, the house were to be passed on to somebody younger, that younger age throws everything out of proportion. And at that point, it would be a big risk for the bank. So no recourse, no payments. And, typically speaking, the reverse mortgage lender doesn't get themselves in trouble or the homeowner in any trouble because they are very conservative with how much they'll lend based on your age and your life expectancy.
Okay, that's kind of a good background on the reverse mortgages, Bill. So kind of explaining how it works specifically and kind of who is the ideal person for this.
Yeah, so the ideal person for this type of a mortgage is somebody who wants to remain in their home. They want to retain their independence and their autonomy. They don't need the help of an assisted living facility, but they are tight on cash, and making the mortgage payment puts them into a bind every month with their budget. So removing the mortgage payment, if that opens up enough cash flow to where it makes the significant difference, that's a great scenario. And I've had people where it wasn't enough. We looked at the reverse mortgage, and not having a mortgage payment did not make a big enough difference. They were still going to be in a cash crunch every month. So in that case, we decided that we shouldn't go down the road of a reverse mortgage. But in a lot of cases, removing the mortgage payment, opening up that extra cash flow makes a really big difference allows them to retain and maintain their independence and can really make a big difference for them.
And you mentioned that it's FHA, so there is some protection there, right? Because there are some, I think, some common concerns that people have with this, right? Or at least there's a perception of some things that could go wrong.
Yeah, and I think the biggest thing that we hear as a concern of something that would go wrong would be, well, here's a couple of them. These are the most common: is if God forbid, when the borrower and homeowner passes away, if there's equity in the home, does the bank take the equity? Okay, so that's a big question. And the answer to that question is no, the bank doesn't. The bank doesn't ever own the home. And any equity that is remaining in the property at time of death would go to the estate, the heirs of the estate. So that money never goes to the bank. The other scenario is, what if the house is significantly underwater? So now the loan amount's $500,000 and the value is only $300,000. So it's $200,000 underwater. Does the estate have to pay that disparity? And the answer is no, because the reverse mortgage was underwritten in accordance with FHA guidelines, and the bank took the risk. They miscalculated. That's their risk. So they would basically take ownership of the property, and then they would sell the home at a loss. Or if the home had some sentimental value and there was a reason why the estate wanted to retain the home, they would actually have the right of first refusal to purchase that home at 95% of the value. So house is worth $300,000 and the loan amount's $500,000. Well, the heirs to the estate could purchase the home for $285,000 and keep it in the family if they wanted to exercise that right. So a lot of the misconceptions around equity are really in the favor of the borrower or the homeowner.
Yeah, that's good to know for sure. And I think a lot of people would also just kind of believe, Bill, this is like, I'm running out of money. I need to, pull some money out of my home. But you can use this strategically, right? It's not just people that are in a desperate position or kind of need a last resort kind of life raft, so to speak, right?
Well, there is a financial advising firm and mortgage company that work together that they believe that everybody should have a reverse mortgage. And what I'll say is that I don't think it's right for every single person out there. There's no product that is right for every single person, but I have seen plenty of math on the idea that a reverse mortgage in place in your retirement to be used in down years when the stock market is down. It's when the stock market is down and you're still drawing your full amount that you need to survive. In those years, it's kind of like compounding in reverse. And if you didn't draw from your retirement in those years, and you leaned on the equity line attached to a reverse mortgage, if you play that out over 10 or 15 or 20 years, what you would see is that the value of your retirement account is substantially higher than if you drew on it in those years, even considering deducting now the new mortgage. Let's say you didn't have a mortgage at all versus someone who said, I'm going to use this to balance out the sequence of returns in a down year. That end of 10, 15, 20-year timeline, when you take that snapshot, the net worth and the investment account balances are so much higher because you didn't lean on them in the down years, even considering the mortgage interest that's accrued and deducting that from the total amount. So this is a great, a reverse mortgage is a great retirement planning tool as well. To your point, it's not just for people that are in a, rough financial situation.
All right. Any final thoughts, Bill, or maybe an example that you might have of somebody that has gone through this process and kind of how that might actually look?
Well, I mean, the examples that I have really been are, a lot of people where we've looked at it and we've said, this is not for you. And really don't let anybody tell you that it is for you. And a lot of times we're doing these in conjunction with the financial advisor and everybody's in agreement. It's not the right product. But I will tell you, for the people that where it is the right product, it can be a really good thing to help people, again, maintain independence, stay in their home, live the lifestyle that they want to leave while they're leaning on their home to do it. And they can do that for many years into the future. So just talk to someone reputable who knows a lot about the subject to see if it does make sense for you. We've had a lot of really happy people in reverse mortgages that were really happy up front. And we talked to them down the road 5-10 years later, and they're still really happy that they did it when we've determined it's the right financial instrument for them.
Yeah, that's the key, right? Is making sure it is a good fit and asking the right questions and working with the right team. So if you want to get in touch with Cross Country Mortgage, always do so by texting the word LEND to 21,000. You'll start that conversation with Bill and his team there at Cross Country Mortgage. But hopefully this clears up some of the questions you might have and really kind of gets rid of some of the misconceptions you also might have carried into this video. But if you have any questions, please don't hesitate to reach out. Bill, as always, thanks for breaking it down for us and explaining the product.
Thanks so much.
This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Litton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.